Well, good evening, good evening, good evening, everyone. As you guys begin to come on in the room, just gonna take this off here and put this up here. Okay, boy, I'm ready to do this thing this evening. I hope you guys are ready. Get your calculators out. I hope you got your sheets, your W4 sheets. Drea, I got your email, girl. Call me. I got your email, Drea. Give me a call. Number's still the same. It hasn't changed in, God, what is it, about 15, 20 years? Dead serious. So just give me a call. Good evening, y'all. As you guys know the rules, as you guys come in the room, tell me how your day was. I want to know how your day was. If this is your first time ever coming into the room, I want to know where you are. What is the location of you? Go ahead and slide from thank you, Bug. Slide from left to right on your phone. If you're on iOS, go ahead and hit that share button for me. If you're on Android, slide from bottom up. Hit that share button. Share people. Today we're talking about the W4. You had a glorious day. I liked it. Glorious is a good word. I like glorious. Glorious was awesome. Today, I would say mine was normal. I think that's the word I would say. Deborah, good welcome. Thank you, Deborah, for joining us. Mine was normal. I'll probably say that. That was a normal day for me. You guys are coming in again. Tell me where you're from. If you are a normal or regular, go ahead and just tell me how your day was. We're going to go ahead and get started. I know people be dragging in or coming in kind of late, but because we have so many things to talk about on the day, I want to get as much covered as possible. Get as much covered as possible. Wow, where do I want to start at, Lord Jesus? Let's put this up over here. Okay, we had a couple questions on Breakthrough Coach in Smyrna, Tennessee. That's right, Drea is a Breakthrough Coach in Smyrna, Tennessee. If you guys don't know, I was a part of Breakthrough for, Breakthrough was a financial seminar, a 12-week financial seminar. I think I was part of Breakthrough for about 10 years. Drea and I helped put 6 years, okay? Helped put the curriculum together for Breakthrough and did some of the first classes when they were free, and I think they're still free in the name of Jesus, but that's a small charge because I remember we had calculators and pens and other materials that people wouldn't bring that we had to recoup the cost for. I think it might be like $20 for 12 weeks. It's not much at all. But I remember when we were putting that thing together, man, we spent long hours getting it done. But in the name of Jesus, we were able to do it successfully. And thank you, Drea, for tuning in. I did get your email. Call me. And yeah, anyway, let's go ahead and get started. We're talking about the W4. If you guys don't know, the W4 is one of the principles that we're going to be going over, especially if you are going into a small business. But pretty much just for your own happenstance. For your own happenstance, we've been praying and people have been praying, God, I need more increase. God, I need more increase. God, I need more money. Help me find more money. And the truth is, many a times the money is hiding in the tax return that you get back in January or February. It's hiding there. That money, we let the government hold for us interest-free. Nobody should ever hold our money and do not give us any return on our money. The whole purpose of lending is to have a return on what you lend. If the government gives you money, or if you don't claim enough on your taxes and you owe, they're going to hit you with penalties and interest. So why are we giving the government extra money as it amounts to the average tax return $3,000, $3,000, $4,000, and $5,000 and $6,000? I've seen tax returns book as large as $10,000. Why are we giving them money with no interest in return? Take this money, utilize that money, so that you can actually begin to appropriate that towards your debt. Now, Drea will tell you this. One of the things that I teach, I emphasize on the air, money management is a mindset. If you change your mind, you will change your money. Broke is a temporary condition, but money is a mindset. Poverty is a mindset as well. Poverty is a mindset, but broke is a temporary condition. If you change your mind about money, money will change its mind about you. It will stick around for a whole lot longer. I'm telling you this because if you do what I'm telling you to do and don't do the first part, you're going to regret it. I cannot tell you how much I focus on this. Many of the principles I teach, even when I did my Wealth Builder seminars, we divide them in half, because if you don't do the mindset change, if you have not shifted your mindset, if you have not changed your mindset, my curriculum is CYM squared. Change your mind, change your money. That's my whole principles, my whole philosophies. I've been doing that, oh God, since 98. 98, change your mind, change your money, 2000, somewhere in there, 98, 2000. So if you don't change your mind, I'm telling you, it's over with. Because what happened is we find this money in our tax returns, we find this money in our W-4s, and when we get that money every single month that we wasn't used to getting, psychology, the psychosis says, the more income we have, the more our expenses increase. This is not something George Howard is saying. This is something that psychologists have said. It's a law. It's the more money you have, the more your income, your increases the more your expenses will increase. Excuse me, I'm sorry. So the shift of mindset, the change of mindset, change your mind, change your money means just because I get more income does not mean that I have more expenses. I take the additional income and I actually use that to begin to pay for some of the foolish decisions that I made before I changed my mindset. The more income is used to pay for some of the decisions that you made before you changed your mindset. If you have not changed your mindset, what happens? You continue the same pattern. You will continue the same pattern. You will get the same results, and that's debt on top of debt, broke on top of broke. Why? Because I tell you that all the time, that poverty is a mindset. If you change your mind, you would change your money. But poverty is a mindset. Broke is a temporary condition. You can be broke today and change your mind, and broke will only be temporary. I'm preaching this again because I want you to emphatically understand this. And I mean this. Emphatically understand this. If you do not change your mind about money, and you do what I'm telling you to do, you will regret it come February. All right? Now we got that out the way. Let's get this thing started. All right. Real quickly, I hope you guys had the opportunity to download your W-4s. If not, go ahead and go on your computer and go to Google and just type in W-4. This is Form W-4. As you see in the bottom right hand, the bottom corner down here, it's Form W-4 2016. Make sure it says 2016. You do not want an older form. All right? You do not want an older form. And then on tomorrow, we're going to actually be talking about the W-4 calculator. We're going to be talking about the W-4 calculator for a very, very brief period of time. If you know how to do the W-4 that we teach you today, the W-4 calculator will just walk you through the W-4 in a minute. Let me get some information off the printer for you. Give me 1 second. All right. So, now we got that out the way. Let's talk about the W-4. The W-4 is actually the letter that we use, the form that is utilized by employers to figure out how much to deduct from your check for taxes. That money is then sent to the government. The government then decides whether or not you overpaid or you underpaid. And they send you say you owe me money or we owe you money. That's simply that. That's what it is. Most people on this form, they will usually put 1 or 0. I can tell you now, if you have not read this form, you will usually put a 1 or 0. And that's typically it. Most people are so intimidated by this little bitty form right here. It's only A through H, literally A through H. That's what 8 letters? It's 8 letters. And we're so intimidated by it. And God forbid we get to page 2. Most people don't even know there's a second page to the W-4 form. And if your employer is not giving it to you, they're breaking the law. They really are. They're breaking the law. You should get this. If you refuse to fill it out, there's one thing, but you are supposed to receive this. And we're going to go over both pages for today because the most detrimental page, in my opinion, is this sheet right here. All right, so let's get started. I'm going to give you a situation. I am a single father. I have one. This is made up. I'm a single father. I have one dependent. I make $40,000 a year. I pay daycare, $350 a month. I pay my mortgage of $900 a month. And I do not invest at this time. I want to invest. I just started following George at gmhoward.com. Just started following GM Howard Jr. Ministries. And we're looking to do the home-based business this year. All right, that's the situation. That's the scenario. Single father or single mother, if you guys. But this is the situation that we're going to use for numbers' sake today. We're going to actually fill in real numbers on your W-4 sheet so that we can determine what we should actually be utilizing for that. Single father, one dependent, pay daycare $350 a month, $40,000 a year, have a mortgage I pay of $900 a month. I don't invest, and I'm looking to be a business owner, home-based business this year. Y'all ready? On your march, get set, let's go. All right. So, as a result of that, we're actually going to be looking at the W-4. All right. The W-4 is simply this. At the very top, this section here, and I know that it's reversed. I know that it's reversed on your screens, so it's like looking into a mirror because I have it faced this way. There's nothing I can do about that. I'm sorry. Unless I turn the camera around, and we know what happened last time I turned the camera around. It was absolutely horrible. So that's when we did the credit part. So this right here actually gives you definitions. So like, for example, definition of exemption, definition of head of household, definition of tax credits, definition of non-wage income, two earner multiple job income, non-resident alien, and check your withholdings. This is just definitions at the top. So really, this form does not start until we get to line A. All right. This is simple as reading, people. It is reading and addition. I think on the back we got a little bit of multiplication, a little bit of subtraction, a little bit of, it's not much. This is addition, subtraction, division, multiplication. And it's very simplistic. Very, very, very simplistic. So let's get started. All right. Line 1. Line A is this. Enter 1 for yourself if no one else can claim you as a dependent. Well, that's easy. We got a 1 there. I remember, I'm a single father and okay, nobody to claim me as a dependent. I guess I should put an age on here. Oops, I didn't hit the camera. Let's say that I would like to be 25 again. Let's say 30. I'm 30 years old. 30 years old. 30 years old. All right. All right, so I'm 30 years old. So nobody's claiming as dependent. I live on my own. I got my own kid. We stay together. It says enter 1 if you are married and have only one job or your spouse does not work. Well, that doesn't qualify. Number 2, you are married and have only one job or your spouse does not work. I'm sorry. Enter 1 if you are single and have only one job. That's the first line. I'm sorry. Line B, let's read it again. It says enter 1 if you are single and have only one job. That's me. So I guess I put a 1 there as well. All right. So let's go. I have only one job, so I have a 1 there. All right. So let's keep reading though, so you guys can understand. If you are married and have only one job, or your spouse does not work, you get to put a 1 there. If your wages from a second job or your spouse's wages total $1,500 or less, so if they have a second job and it's less than $1,500. Let's say they work, but it's only a part-time job. They may volunteer at the ministry, and the ministry may donate to them or give them very little money. It's less than $1,500. The government says that's like not having a job. You get to put a 1 there. All right? C, enter 1 for your spouse, but you may choose to enter 0 if you are married and have either a working spouse or more than one job. If you got a spouse that don't work, you put a 1 there. If you have a spouse and they work, if you are married and have either a working spouse or more than one job, you may want to enter 0. All right? And then it has a little brief note in there. It says entering 0 may help you avoid having to little tax withheld. So I'm going to tell you this too. Do not, and I'm going to say this, I cannot say this enough. Do not overestimate. Do not overestimate. That's simple as that. If you overestimate this stuff, and I don't want to scare you. I don't want to scare you because they wrote this up pretty good, and then you can actually go back online and use the W-4 calculator at the IRS site and calculate. They will tell you exactly what are you head of household, are you single, are you married, and then they will tell you how many exemptions to file if you use the W-4 calculator. This stuff is not hard. The IRS don't want you paying too much in taxes. They set up everything that they can do so that you get the right amount of exemption, so that you ain't not getting a $6,000 tax return. Take that money and pay it off. That's pay off your debt. All right. D, enter the number of dependents other than yourself or your spouse you claim on your tax return. I know some of y'all like, I want to claim my spouse. You can't claim your spouse. So enter 1 for your spouse. Enter 1. at least on this one anyway, for a dependent. Enter the number of dependents you will claim on your tax return. That's D. So I'm going to actually put I have one dependent based on what I said at first. All right. It says enter one if you will file head of household. Well, what is head of household? Let's go up to the top right here, and we're going to read where it says head of household. What is head of household? Generally, you can file head of household filing status on your tax return only if you are unmarried, so married people, you don't qualify, and pay more than 50% of the cost of keeping up a home for yourself and dependent or dependents and or other qualifying individuals. And then it tells you can see publication 501 that will give you more details. Well, let's see. My situation is I'm a single father and I have one dependent. I own my own home, so I pay more than 50% of the cost in the home because it's just me. And I have a dependent who lives there. So now I'm considered head of household. So I can actually put a 1 here if it says enter 1 if you will file head of household on your tax return. So now I actually have a 1. All right. F. Enter 1 if you have at least $2,000 of child or dependent child care expenses, which you can claim on your credit. Note, do not include child support payments. Child support payments don't go here. All right. We already said that I pay $350 a month. You take the $350 a month. That's $1,700 a year. I think $350 a month. It'd be $3,750. So yeah, $3,750 is what that comes out to be. So yes, I qualify for that child exemption. So we're gonna put this down here. Man, I'm already at 5 deductions already. Most people put 1 and sign it at the bottom and they done, and they wonder why they getting a $5,000 and $6,000 tax return. I'm at 5 exemptions already. All right. Okay, number G. G tax credit, including additional child credit. See publication 972. Tax credit for more information. If your total income will be less than $70,000, $100,000 if you're married, and to 2 for each eligible child. Then, so that's if you get the income earning credit, the EIC. In this situation, with the kind of money I make and me being in the home, I would not get that. I would not get that. But if you get the earned income credit, no, I would get that because my child. Yes, I would get the earned income credit. Because my kid, we're going to say my kid is 6. I got to make it right to make sure I get it. So let's say my kid is 6. All right. So I actually have 1 kid and my income is less than $70,000. I make 40. So I actually get to put a 2 here. I get to put a 2 here. So we're going to put a 2 in line G. So what is it saying? If you have a child that you take care of, and it has to be your child. The income credit has to be your child. They're cracking down on you buying other. What about the dog? Lord Jesus. Fido don't count. Fido don't count. Fido, well, I wish Fido counted, but Fido don't count. But we might be able to. No, I'm not going to bring it up. So no, I'm not going to do it. So y'all know I'm always creative thinking. So we might find a way to use Fido later on. Let's put it that way. All right. So if your income is so for every child that you can claim on your taxes, and you make less than $70,000 a year for, you put a 2. So if you have 3 children, that's 2, 4, 6 that you put there. My situation, I have 1, so I'll put a 2 there, and Fido don't count. All right. It says add lines A through G total here. So I had 1 in line A, 1 in line B, nothing in line C, 1 in D, 1 in E, 1 in F, that's 5, and then 2 in G. It says add lines A through G, so on number 7, we're going to put, well, line H, we're going to put 7. I have right now 7 exemptions. All right, that's pretty much the front page of your W-4. Pretty simplistic if you read, right? Right. All right, so as you get down here to line number 5, because line number 1, as you get down here at the bottom, here, very simplistically, line number 1, your name. Line number 2, your social security number. Number 3, check if you're single, married, or married but withhold at a single rate. If you're number 4, if your last name differs, you want to check that. Number 5, the total number of allowances you are claiming from line H or from the applicable worksheet on page 2. Well, what is the worksheet on page 2? It's this thing, page 2. Wow. So we don't finish page 1 until we finish page 2. All right, let's get it started. Y'all ready? Let's go. It says, enter an estimate of your 2000. No, I'm sorry. This is line 1. I'm reading right here at the very top. Line 1. It's the deductions and adjustments worksheets. This is when you itemize. This is when you itemize your taxes. This is what y'all want to pay attention to. This is where the big bucks come in. All right. It says, use this worksheet only if you plan to itemize deduction or claim certain credits to adjust your income. Many people don't do page 2 because they think it's intimidating. And it can be intimidating because it's dealing with numbers, it's dealing with finances. Most people say, I don't want to take a chance of owing, so I don't want to deal with it. Listen, as long as you don't overestimate, as long as you use that income calculator on your W-4 form, don't worry about it. The Vocal Doctor, thank you so much for joining us. Don't worry about it. Don't even worry about it. I wouldn't worry about it at all. Do use your resources. The IRS uses resources for a reason. Use your resources. It's not that bad, I promise you. All right? So, it says, enter the number from line H. Number 1. I went all the way down to the bottom. It says, enter an estimate of your 2016 itemized deduction. So, what is it saying? It's saying it wants you to estimate for the year of 2016, what are your deductions going to be? All right? We're going to estimate on the low end because you don't want to estimate on the high end. It's better to estimate too less than too much, because if you do it too much, you're going to be owing taxes, and we don't want to owe nobody. All right? So, except love. All right, it says, enter the estimate of your 2016 estimated itemized deductions. These include your qualifying home mortgage interest. How will I know that? Well, if you know how much you paid last year in your itemized home mortgage interest, it's going to be more next year, because every year you pay less interest, more principal. So it's less, excuse me. You pay less interest, more principal. So it goes down a little bit. All right. So let's just say, for example, and you can get out your mortgage statement, but it really ain't that deep. Let's just say, for example, you got a 6% interest rate on a house, and well, we ain't gonna do it by rate. Let's just say you know that on your PITI, your principal, interest, mortgage, taxes, insurance, that your principal, $500 goes towards your principal, $200 goes, well, $500 is a lot. You got to be at the very end. $500 go towards your interest, and more like $200 go towards your principal, which is still a lot. That really don't happen until you get down to your about the year 20 out of 30. So, well, 20 years left out of 30 rather. But we're going to use that. So if I know I pay $500 a month, goes towards interest, then I would say that that's $6,000 a year. Is that easy? So I know that, and we write this down. We're going to take a pen, write it down. I already know that we're going to say mortgage interest is $6,000. And we're just going to call it mortgage interest. All right? What else do we get to deduct on our 2016 taxes? Charitable contributions. If you pay your tithes and you make $4,000 a year, $40,000 a year, you know you got at least $4,000 there. At least. You pay your tithes, you make off your gross. You pay your tithes off your gross. You know you got at least $4,000 there, but that's not including seed, sacrificial seed, and offering. So we're going to say we gave about $5,500 to the church this year. All right? Y'all like, $5,500? Yeah. Believe in God to be a 5-figure giver. And this is made up. It's made up, but yeah. 5-figure giver. I'm believing God to be a 5. I want to give 5 figures, and then we're going to believe God to give you 6-figure giver. 6 figures. I want to give $100,000 to the church one time. Yes, sir. I want to do that. I want to do it. All right? All right. So we got $5,500 in charitable contributions. I can't wait till the church said, we about to build. And I said, well, I got the first $1 million. We about to build a new youth center. You say, you know what, Pastor, go and write the check. Here it is right here. We got this right here. That's what the income for the kingdom is about. God's not giving us money to be hoardish and selfish. You're blessed to what? Be a blessing. That's what this is all about. How can you push the kingdom through? How can you save more souls? What lives can you impact with money? We supposed to feed the needy. We supposed to take care of the widows and the orphans. We supposed to be the one that's feeding the poor. The church, we supposed to do that, not the government. But you can't do it if we broke. And we can't do it if we give the government our money. In Jesus' name. All right, so we got $5,500 in charitable contributions. State and local taxes. Now, whatever you paid in your state taxes last year, we'll just say I paid what so much it was. We'll just say it's $500. Not much. Okay, state and local taxes. Medical expenses in excess of 10% of your income. So again, if I made $4,000, $40,000, if I rebuke the government. If you made $40,000 and anything in excess of 10% of that, which would be $4,000. So let's say you had $5,000 in medical bills, and you can put $1,000 down there. You can put $1,000 down there. But for our case, we're not going to put anything. Again, it's better to underestimate than to overestimate. So we're not going to put anything for medical expenses. What else we got on here? This is really simple. Just read and take time. It's worth your money. All right? If you're born before 1952, you take 7.5%. So if you made $40,000 at 7%, that's like $2,800. So if it's more than $2,800 in medical expenses, then you want to actually. So this year my deductible is $5,000. I know I always do my deductible. That's $2,800. I know that I got another $2,200 there. All right, and then I didn't do the 0.5%. So if you want to do the 0.5%, that's my numbers are a little bit off. I just rounded up. All right, or down rather. So we were at the of your income and miscellaneous deductions. We won't put anything for miscellaneous. All right, for 2016, you may have to reduce your itemized deduction if your income is over $311,000. I'm not at the $311,000 yet, so we don't have to worry about that because I only make $40,000 a year, according to this worksheet. In Jesus' name, y'all forgot this year I'm declaring millions in Jesus' name. If you're married, filing jointly, or a qualifying widower, it's $285,000. Head of household, $259,000. And if you're single, not head of household, $155,000. So that's if you have to be adjusted just a little bit, but we don't have that problem. So line one, we have $6,000 in mortgage interest, $5,500 in charitable contributions, and $500 in state and local taxes. Okay, so that gives me $12,000 that I'm going to put right there at line one. Y'all still with me? 12,000. This is how easy this is to fill this out. Now, again, I'm going to say this again. If you don't get part one, you can't do part two. What is part one? Change your mind, change your money. CYM squared. I've been teaching this stuff, and it's funny to hear people pop up now and start teaching some similar principles. I've been preaching this stuff for almost 20 years. Dead serious. Wrote a book about it, everything. CYM squared, change your mind, change your money. I believe it. If you don't change your mind about money, I promise you're going to go broke if you don't do it. When you get that extra money, psychology says that the more money you have, the more money you spend. That's not what we do. We're not consumers. The word consume means to destroy, to squander, to eat up, to burn up. We don't do that with money. We are wealth builders. We're responsible with money. We're good stewards. We multiply money. That's what God has called us to do, to multiply our seed. That's what we do. So as our income goes up, because our W-4 is now calculated correctly, and we're not going to get large tax returns, we're going to be responsible to take that money and put on our debt. We're going to expel that debt as quickly as possible. We've been praying to get out of debt. This is a way to get out of debt, and this is just one of the ways that we teach to get out of debt. Are we going by 2015 year to date? Not yet, Lady Drea. On this right here, we're estimating 2016 deductions. We're estimating 2016 deductions. So if you own a mortgage, if you own a house, if you do, it may be for some people, just maybe you may not own a house, and you may not have a state tax or a local tax, but you have charitable contributions. I'm giving the Lord 10%. I make $30,000 a year, $40,000 a year. There's $3,000 or $4,000 that you know you're gonna put right here on line number 12. For us, we had mortgage interest, we had charitable contribution to $5,500, and then we had state tax at $500. That's $12,000 we put right here on line number 1. All right, line number 2. If you're married, filing jointly, or qualifying widower, put $12,600. That don't apply to my situation, but it may apply to yours. Good morning, good afternoon, Mr. Robinson. $9,300 if you're head of household. Well, that's us. So enter 2, which is $9,300. Or if you're single or married filing separately, you put $6,300 there. So on line 2, for us in this situation, you may be different, we're going to put $9,300 here. All right. Now, y'all thought this stuff was going to be hard, didn't you? I got to reset this computer. It's actually tripping on me. Give me 1 second. All right. While that's resetting. All right. So here we go. Y'all ready for this? Hold on. Restart anyway. All right. So line 3. Subtract line 2 from line 1. I just resetted my calculator, so I got to do it manually. 12,000 minus 9,300 gives me 700, and that's 11,000 rather. It gives me 2,700. All right. So that gives me 2,700 on line 3. All right. So on line 3, we want to put 2,700. Is this math hard, y'all? It's not hard. I promise you, it's not hard. Takes a little time, takes a little discipline, but it's worth it when you're saying, I focus my mindset, I got that pit bull tenacity, I got resolve, that I'm getting out of debt, I'm going to start building increase, I'm going to start building wealth. When you got that pit bull tenacity, man, you go through whatever you got to go through to get that extra $300, $400, $500, $600 a month. Hey, Dre, this is not hard. That's okay. If you think it's hard, there's a W4 calculator that you can use. Go to... Oh, Drea, it's cool. You do the same thing, girl. You pour into other people. You do it every single week. And so, yeah, if not every single day, but you preparing for this. So let's do this. Y'all ready? All right. So it says, and on line number 4, enter an estimate of your 2016 adjustments to income or any additional standard deductions. This is the fun part. I'm smiling because it's the fun part. Remember, in the example, I am a single father. I have one dependent. I'm age 30. I make $40,000 a year. I pay daycare $350 a month. I have a mortgage of $900 a month, and I don't invest. And I'm doing the GM Howard Financial home-based business this year. So, with that being said, if I'm doing the GM Howard home-based business this year, I got a tax deduction. Because I got a home-based business. Thank you, George Howard. All right. So, I know I got one email for somebody who asked me to send it to him. I did. I was about 30 minutes before we got on the air. I was faithful. I did send that off to you for deductions. But for those of you who did not ask me to send it to you, I printed some things off from, guess who? The IRS. You see them people right there? It tells you, what can I deduct? They don't tell you what you can and can't deduct. It's up to you to find this stuff. And I found some laws, and I watched some videos, and I read some books, I'm telling y'all don't know how much study goes into this stuff. But I say it's an investment in me because once you get it, you got it forever, and you can teach it forever. I'm trying to sign back into this computer. And it's tripping on me. All right, I'm in. All right, so what can you deduct? This is what this says. Now, y'all got to get this. This is the IRS for you. Just send it to the group. Okay, I'll just send it to the group. Dre just put me on Front Street. Just, you got an email address. Just send it to the group. Okay. So, all right, I got you. All right. Drea, y'all don't know, Drea is our official, unofficial secretary, as well as I can call her my big sister or my mama. I don't know which one she want to be, but she keep me in order. She help me make sure that I keep everything aligned right. She hold me accountable. Yeah, she hold me, lady. Drea, she would be you. That's exactly who she would be. Drea, if y'all don't know, Drea was my big sister in real life. I still say she my sister. And it's not letting me sign in. I don't know why. On this computer. Well, I don't need it anyway. All right. So what can you deduct? This is what it says. To be deductible, a business expense must be ordinary and necessary. So you can't be saying, for my business thing, I'm going to need a spaceship for your home-based business, and that spaceship gonna cost $2 million or 200 trillion. No, you don't need a spaceship to run your home-based business. It got to be ordinary and necessary. Those are 2 words. Do you need it, and is it something that people normally need in the profession that you're in? Don't sound hard to me. An ordinary expense is one that is common and acceptable in your trade or business. We just talked about that. A necessary expense is one that is helpful and appropriate for your trade or business. It's helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. Boom. So if you use it and it's necessary and it's normal, deduct it. Bam. All right. So what are the common practices of deductions? Well, I'm glad you asked, because we got some fresh tips from another wide source. I think this came from bankrate.com. Number 1, your home office. I like the home office deduction. All right. And it's based on square footage. We're not going to go into all the square footage things. We're just going to actually write it down. Let's just say I use 300 square feet. We just say the home office deduction. We'll send that over tonight. I'll send it over tonight, the spoken, the confession over your life. Let's say the home mortgage deduction is not home mortgage, but the office deduction, we'll just say it came out to be $2,500. And this is estimated. Okay. And then you got things like, did my printer not print right for me? See how the printer do? It didn't even print right for me. So we're just going to go up there, wing it, but that's okay. So we're going to say this is office. If my office is, let's say I got a 1,200 square foot house and my office is 300 square feet. That means that's 1/4. 300 is 1/4 of 1,200. So I guess 1/4 is 25%. So I get to take 25% of all my utility bills and use that towards my home office. Now, I'm going to break that down a little more easier, a little simpler. If my house is 1,200 square feet and my office is 300 square feet, you're like, what's the square footage? We got to work with it. Okay. You got to find out the square footage first. Okay. And you can estimate. This is that the IRS is not going to come in and start measuring the walls in your house and taking the times the width, length, and height and the perimeter and say you only have this much square footage, and yet you can estimate. It's safe. It's okay. Cool. Don't stress yourself out over this. It's not that bad. All right. But if your office is 300 square feet, which is about the normal size of a bedroom, you transform it into an office. 300 into 1,200. 300 goes into 12 4 times. Okay. So that lets me know that that is a fourth or 25%. A quarter goes into $1 4 times. 25%. A quarter is worth 25 cents. 1/4, 25%. All right. So if my utility bills average out, we say average out to be $200 a month, including winter, and you take that times 12, that gives me $2,400. All right. A quarter of 24 is at 600. Yeah, it'd be $600. So I get to write off $600 for utilities. Now, I know y'all like cell phone. You can only write off cell phones for the part you use for business. If you have a second cell phone used strictly for business, you write off 100%. If you have a cell phone that you use half for business, half for personal, then you write off half of your cell phone bill. If you do a quarter business, 3/4 personal, you write off a quarter of it. But we know that the majority of our phone calls are about business, because everybody we talk to, we're talking about business with, in the name of Jesus. So let's just say our cell phone bill is $100 a month. That's $1,200 a year. But out of that $100 a month, we'll go with 50%. All right, so we go with 50%. So it gives me $50 a month. 50 times 12 is $600. So that's another $600 I got in here. All right. Mileage. If you guys drive your vehicle and you're driving to do a home-based business or do something, or you're driving to advertise, you're driving to meetings, you're driving for anything that transforms or do something with that business, it's tax deductible. So let's say you drive to work. Let's say you're Drea. Drea, you live in Murfreesboro, right? And let's say you live in Nashville, you work in Nashville. So Drea, how many miles do you drive to work a day? How many miles? Estimate. Just give it to me. Estimate. How many miles of work do you work a day? How many miles do you drive to work a day? One way. One way, would you say, is 20 miles, 15 miles, 30 miles? I'm waiting. I think you work in Nashville anyway. I know that's 42 miles. Lord, that's one way? Lord Jesus, we praying for you. And that Nashville tracking is brand new. When I left Nashville, I could get to Smyrna and Murfreesboro, and I might run into traffic. I might not run into traffic. Now, Lord Jesus, I went back to Nashville for the family reunion. I said, I ain't used to this. Man, there was traffic jams on both sides of the house. But they didn't have an increase of about 1 million people over the last like 5 years. It's ridiculous. Nashville is exploding. But I told y'all that was going to happen. Nobody listened to me. Told you it was going to happen. So we got, we'll just say 40 miles. And that's 40 miles a day there and 40 miles back. That's 80 miles she drives to work a day. Right? But that's for her job. That's not for a home-based business. Unless Drea stops at the gas station and hands out flyers, hands out business cards. Or she stops at the coffee shop and hands out flyers and she's advertising. Or she stops and begins to market or publicize someplace different. And she does that on the way there and on the way home. Guess what Drea just did? She's advertising for our home-based business, which makes that trip, guess what? Tax deductible. So out of that 40 miles that she went to work, let's just say 30 of them we can write off. And then we can write off 30 of them on the way back. We'll say 25. We'll make it even. So we say 50 miles a day, every day. So we know we go to work 20 days a week. All right. Gives me 1,000 miles. All right. That's 1,000 miles a month. But we have it's 1,000 miles a month. And there's 12 months in a year. That's 12,000 miles that I can write off just going to work. That's just going to work. And that's eliminating 30 miles that we could have written off. We eliminated 30 of them because, IRS, we got to say, you can't write off all of it. You got to make it seem legitimate. All right. So that's just for going to work. That ain't including the weekends when we worked or when we worked when we got home or if we went someplace different. But just for this scenario, we're going to say 12,000 miles that we get to write off just for that. All right. Now, what does 12,000 miles equal? Well, 12,000 miles equal 54 cents a mile. Well, for math's sake, for my sake, since my calculator's down, we're going to say 50 cents a mile. But you really get 54 cents a mile. 50 cents a mile at $12,000, 12,000 miles makes $6,000 I'm writing off for mileage. I like mileage. 6,000. If my car went in the shop and I use my car for 50% business, 50% work, if my car goes in the shop, 50% of that repair bill is what? Tax deductible. Y'all got to get this. Begin to understand this. My internet in my house, 50% is for, yeah. She like, I didn't even know this. Like, yeah. My internet in my house. I use my house for 50%. It's 50% for business, 50% for personal. My internet bill, I got a fax machine, which is my home phone, and this is real life. I got a fax machine, I got cable, and I got internet. And let's just say I pay $150 a month, my alarm system. So my business utilized 50% of all those. $150, that's $75 a month. That's $75 a month, that's times 10. So that'd be $1,000, right? Let's see, 750 times 10, 75. What we say, 75 times 10 is 750, plus another 300. So that's actually $1,050. So that's $1,050 we're going to write off for cable, internet. And then we got mileage. Y'all getting the picture of this? Are y'all starting to see how we're estimating just the business tax? Now, on this line number, and don't forget, we're still looking at this number 4 here. That's not including things like that you can write off stuff like your pre-tax daycare. Drea, all right, okay, let's stop here. And Drea or anybody else that got some questions, because I don't want to go too far and then we leave behind. What questions do you have? Or I'll tell you what, let's save them for the end. Let's save them for the last, give me 5 more minutes. Okay, I'll tell you what. If you need additional help, email me and give me your phone number and I'll probably call you this weekend. Not making no promises because I get in trouble. But I will try to set up and hey, Brittany, are you on the line? Is Brittany on here? I thought I seen Brittany earlier. Raven, you quit. If Brittany is on here, Brittany will set up your appointments. Email Brittany at Brittany, you want me to give the AssureTech email? What do you want? What email? Brittany, put your email address in there. Email Brittany and she will set up my calendar. She has access, 100% access to my calendar. When she puts it on, it automatically goes to my phone. It will automatically go to my phone. When my phone goes off, I usually try to stay in order with that. If not, I got 1,000 things I do during the day. I gotta stay organized. If it's not on my so email Brittany at that address right there, email address, and she'll get you on my calendar for some personal time with this as well. All right. Now, let's see here. Where are my notes at? All right, so on line 4, we still get the stuff like your student loan interest. You got student loan interest you paying off? That goes on line number 4. So let's say we got $1,000 in student loan interest. $1,000 in student loan interest. Y'all know y'all want $1,000 in student loan interest. You got stuff like your health savings account, your health savings stuff. But we're not going to go into all that. We just remember you don't want to estimate high. So let's just say this is it. That's all we're going to use, even though there's several other business expenses. I want to talk about another one, though, that is so important. This blew my mind. I actually heard another video that I heard people talk about this. Blew my mind. Messed me up. I said, what? I had no clue about this. And if you have a child that is between the ages of 6 and 18, you can hire them to work for you and pay them. Somebody say no more allowance. And you get to write off their salary on your taxes. Boy, that's beautiful, ain't it? I can pay my child to work for me. I don't have to pay him an allowance, and I'll get it off of my taxes. So that means if your child, slavery, no. That means you're teaching your child the benefits of working. Listen, I don't believe in allowance anyway. Money and work go together. When you start giving kids money, that gets that entitlement theory. When we were younger, we had to go out and get summer jobs. We had to cut grass. We got compensated for work that we did when we were younger. And old school. He said old school, he's starting tomorrow. Clean your room for a check. Yeah, that's what I used to teach. But now, not only you clean your room for a check, but now you're cleaning my office for a check. Now you're making sure that the ink cartridges are fresh and things, making sure the copier stays full of paper. You're making sure that my voicemail is checked and you write down my notes. You're making sure all these things. These are small tasks, but I'm paying you $1,000 to say I'm paying you $1,000 a month. Now, am I going to give my kid $1,000 a month? No. That means I'm going to give him $250. But that other $750 I'm putting in a savings account for his college fund. But that $1,000 I'm writing off as a tax deduction because it's going to my son. Y'all just missed that. I get to pay my kid and write it off of my taxes because he's my first employee. And they don't pay taxes on it. Oh my God. Y'all better get this. Y'all better get this. This alone will mess you up. This alone will mess you up. Pay your kid to help run your business. Really? Tax-free? And I get a tax deduction? What about the dog? Lady Drea, you're going to find a way to get Fido in there. Okay. I'm going to try to look this up. I don't know if this is correct. But if your dog is your mascot, I'm serious. If your dog, unemployment insurance, I'll get to that, just to remind me about it. If your dog is the mascot for your business and you pay the dog for the pictures, you can write that off on your thing. Here's the problem. How does the dog spend the money? That's what you would have to explain to the IRS. Well, you gave the dog $1,000, but you are the dog's owner, so you got $1,000 from the dog, so you really paid yourself. How do you justify that? So I don't know how that actually works. Wardrobe. It depends on what profession you're in. If you're like a mail carrier, then you can probably write that off on your taxes. Well, no, I'll take that back. Mail carriers are W-2 employees, and you get 2%. Has to be more than 2%. If you're a 1099 employee, so for me, I'm a minister. Any kind of minister, any clergy collars that you wear, tax deductible. Any robes that you're required to wear, tax deductible. Any kind of books or material that you actually utilize is tax deductible. Unemployment insurance, I'm glad you brought that up, Josette, is only necessary if you have employees. If you file a corporation, you have to file for unemployment insurance. And each state is different. So I'm going to actually say that too. Each state is different. So you want to look at your state and find out if it's mandated. Because I know Tennessee is not, but I believe Indiana is for unemployment insurance. So you want to look that up individually for each particular state. All right. So how much money do we have here? We paying the kid $1,000 a month. I'm telling you now. He got to get paid, get out of my pocket, and we paying him a savings account. Now listen. What happens if your business didn't even make $12,000 a year, but you still paid that money to him? That means you get to write that off as a loss on your business. The business took a loss. What does that mean? It adjusts my income. We're going to talk about that at a later date, exactly what happened. So, line number 4. We have, what was this money up here? We got $1,000. What was this $1,000 for, y'all? I don't even remember. It was $1,000 for that, $1,050 for cable, $6,000 for mileage, $250, $2,500 for office, and $600 for utilities, and $600 for something else. I don't remember. So 600 is $1,200 plus $2,500 makes you $3,700 plus another $6,000 gives me $9,700 plus the $10,000 gives me $19,700 plus $1,000 gives me $20,700. So we're just gonna round down. We're gonna put $20,000. $20,000, and that goes right here in line number 4. Line number 4, we're going to put $20,000. All right? Kid employee, $1,000 a month. Yes. All right. Add lines 3 and 4 into the total. So $2,700 plus $2,000 is $20,207. So I'm sorry. $22,700. Lord Jesus, I couldn't get that out of my mouth to save my life. $22,700 is what that adds up to. Line number 6. This stuff is not hard. Line number 6. Enter the estimate of your non-wage income, such as dividends and interest. Remember we told you an example? I don't invest. Not yet. Not yet. Because I got to pay off some of this debt. I'm taking this money that I'm going to get off this new form right here. We're going to pay off this debt, then we're going to start investing. But I don't invest yet, but it's coming. All right, so that would be 0 on line number 6. We put number 0. I keep hitting the camera, y'all. I'm sorry. Line number 7. Subtract line 6 from 5. That's not true. Okay, so you subtract line 6 from 5. So you subtract 27 minus 5. 5 from 6 actually is what that says. Yeah, you're subtracting 0 from $22,700, which gives me $22,700. So it goes right there again. So then we're going to divide that by $4,050. That's going to change every single year. I'm just going to do that off the top of my head. $4,055. We'll just do $4,000. So we got 4. That's 1. 8 makes 2. 12 makes 3, 16 makes 4, 20 makes 5, so we're going to say 5. So that number right there is number 8 is going to be 5. Number 8 is going to be 5. Yeah, I forgot I ain't got my calculator with me, so you just got to use that other sense. And then he says add lines 8 and 9 together. Oh, number 9. Enter the number from your personal allowance worksheet from page 1. Remember page 1? Remember on page 1, we had 7. Where's it at? I'm trying to find it. Right there. We had 7 deductions on page 1 from line number H. So we're going to actually put line 7 on line number 9. We're going to put 7. On 10, we're going to add lines 8 and 9. It gives me 12. Then it tells you stop here if that's it. Right, it says subtract line 5 from 4. So I'm going to subtract, you got to have do you have the 2016 worksheet? Look down here on page 1. Look at the bottom corner right here. 20. Make sure it says 20 because we're reading the exact same thing. This should be exactly the same thing. At the very top on page 2, at the very top right here, it gives the year as well. It says right there, 2016. So look and see. It says yes, it's 2016. And it says subtract 4 from 5. I don't understand that. We got to have the same sheet. On mine it says subtract line 6 from line 5. So line 6 is 0. I'm going to subtract that from line 5, which makes it the same thing, $22,700. So on line number 10, we're going to then take that and remember down here at the very bottom where it says the total number of allowances you are claiming from line H or from the applicable worksheet on page 2. When we got done with the applicable worksheet on page 2, we came up with 12 deductions. You might say, you know what? 12 seems kind of high. Let's just go with 10. If your deductions went from 1, or exemptions rather, your exemptions went from 1 to 10, what does that do to your check? I'll wait. What does it do to your check? Can somebody say increase? That's money that you've been given to me every single month, every single paycheck you've been given. So let's say it's $250 a check that you're getting. That's not free money. That's debt cancellation money. That's money you're not used to seeing. Y'all got to get this. It's money you're not used to seeing. Since you're not used to seeing that money, you want to take that money. Somebody screenshot the hearts too, by the way. Go ahead and screenshot those hearts before it starts freezing. Screenshot the hearts. That's money you're not used. Don't spend it. Don't spend it. Pay off your debt. And we're going to start talking about next week, what is a debt acceleration plan? How do we pay off debt? What does it mean? How do we do it systematically? We're talking about it on next week. Money, 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 money is what we want to talk about. That's what it is. But I'm telling you, this is what you do. This is how you do it. Can you go out and come back? Who, me? Yeah, but we're done. It's 8:30, so we're done for today. I'll upload it so you guys can see it on YouTube. But we're done for today. With that being said, I'll see you guys on tomorrow morning. If you're missing the morning meditationals, you're missing a blessing. We're talking about this thing right here, the tongue. We're going to be talking about the power of life and death on tomorrow morning, and what is life and what is death. Because if you have the power to speak life, you have the power to speak death, what exactly does that mean? Tomorrow morning at 7 a.m., I'll see you right here at Faith for Financial Freedom. As always, thank you so much for being a part of this ministry, and God bless you. And don't forget, you are blessed to be a blessing. God bless you.